Investors and traders, welcome to the channel Market Chart Pattern. In this video segment, we are going to take a look at the key US technology stocks as we always do. This video is for educational purposes only and it is not a financial advice. So guys, as you have been following our channel for quite some time, you will know that this is the segment in which we are looking at about 5 or 6 key US stocks, and we do the analysis using Fibonacci ratios, projections, and retracements, and expansions and extensions. And also we look at things from a harmonics perspective and pattern recognition. Those guys who are new to the channel, subscribed recently, welcome to the channel, and the repeat viewers, thank you very much for the support. So what we are looking at is the daily chart of Amazon.com. So here, just zooming out on the daily chart, what we see is that this level here, the red line, we were looking at certain patterns. One of the things that we really like to look at this channel is the one-to-one symmetry. We like to label it as ABCD. There were several ABCD patterns coming together earlier this year around this level of around $80. And one of the things about the Amazon stock is it likes to do double tops, double bottoms. In fact, it trades in ranges. And what we are looking at since the March 2020 is a huge range. So this entire box that you see here labeled here, it's basically a range. And what this stock did was actually it just came, so it went higher from here, boom, it went into quite a lot of consolidation starting sometime in September 2020, and then this is the range highlighted in this box. Look what it did: top of the range, bottom of the range, a retest, didn't break down, retest, didn't break out, pulled back into the range, boom, broke out of the range. What it did, top of the range, bottom of the range. In fact, when it was here, we didn't know it was going to be a range, so that was a top. Then it pulled back right back into this range again, pretty much halfway. Then we had a retest of this, so now we knew that potentially it was a double bottom, but again, formation of a range. What it did do here, try to take this high out, was not able to do that, formed a double top. So again, top of the range, came down, this time broke out of this range, and then we knew that it had broken to the downside, and that's when we had this big move to the downside. And what it did, if you look at this whole thing, it's a big range. So that was the top, double top, attempt one, attempt two, double top, came down. Here we had the bottom of the range. What did it do? It formed another test, was not able to break the price to the downside, at least not till now, and we labeled it as potential double bottom with a question mark. And in fact, we also labeled it as, is this a double bottom in Amazon? And this is the double bottom that we are referring to here, around $80 per share level. So what this stock has done is now it's been moving in ABCD fashion, and we had actually called this ABCD out right at the 61.8% Fibonacci retracement. Initially, we were looking at certain support levels here. The stock actually failed this one around 101, and that was an indication that I was going to have a deeper pullback. And in fact, this is what it did. So right here went back into the support zone between 61.8% and 78.6% Fibonacci retracement. And all along, if you have been watching our channel, we drew this green ABCD with a dotted line here with a question mark. It did appear that, in fact, the price might actually be moving in an ABCD fashion with $120 per share as a possible target. However, nothing moves in a straight line in stocks or in the markets. So we faced some resistance, and at one point it looked like it was going to break this line we had drawn at $96 per share level, 96.5. And what we had actually anticipated, if the price remains above this, there's a chance that actually, in fact, the price is moving in an ABCD formation, and we're going to have the first challenge coming in around $113 per share level, which is going to be this top here, and possibly even reach to $120 per share level. And what we are looking over the last few trading days, last week, ever since the earnings have been out, the stock had a reaction to the downside, and it's been just creeping up higher, and I was going to go and challenge this high around 110 and a half dollars. So what we're looking at is, in fact, if the stock is able to take this high out, um, the possibility of getting $120 is getting closer. So this is what we are watching in the Amazon stock. Let's go to Aapl. So this is the daily chart of Aapl. In Aapl, our daily range target was between $171 to $175 per share level. That has been met. We were watching this wedge formation, and also this possible three drives to a top level, top pattern highlighted in yellow. It did work for a day, maximum two, and the earnings came out, and boom, this pattern actually failed. So which is quite good, because when the pattern fails, then what we were anticipating might happen did not happen. So it was a breakout onto the other side, and now we are looking at is perhaps the price is actually going to go and test this upper range of $176 per share level on the left hand side. What we see is, here we go, it looks like it might go and challenge this level. So again, we are in ballpark, same range figure that we have been anticipating, $171 to $175 per share level. One of the things about the Aapl I would like to highlight again is this symmetry. So one of the things that the channel which we really like to um, highlight is the markets tend to repeat over and over again. And one of this concept of market symmetry is this, that when this in this um, channel formation to the downside, the highest rallies have been of this much magnitude. So if we just clone this or just copy this and move it to this point, look exactly the same, and now we are in pretty much the same ballpark figure. Now the key part is that if this symmetry is broken, um, then what it means is that something has changed, and there is a possible change in the market structure. So breaking this symmetry to the upside is good for the stock, but because it means that higher prices are then likely. So just for Aapl, just for now, we'll just zoom out into the weekly chart. Extremely strong support, because of look at how many Fibonacci aspects were coming together here. $128 per share level, and now it's going into this resistance level, this range of $171 to $175 per share level. And of course we have this high up there at $182 per share level, but the price momentum remains strong, and if it's able to break out of this range of resistance, then that's going to be a breakout of this range which has been in formation since 6th of December 2021, so a while ago. Okay, let's get back to the daily chart, and now we are going to take a look at Tesla. So guys, Tesla stock are very interesting, because in the yellow you see this pattern which we had highlighted in advance, and this ABCD is actually one-to-one price projection, and it was fairly close to this 61.8% Fibonacci retracement, about $10 lower, and Tesla stock moves quite a lot, so $10 might not be too much in Tesla. So it seems to have actually respected this level fairly well, and the price is slowly but surely creeping higher. And as long as this low is maintained, there is a pretty good chance that we might actually be in the early stages of this pattern formation of ABCD. So let's take this. There we go, which could in fact take the stock to as high as $270 per share level, roughly speaking. But the key is this $210 per share level, this resistance right here. Let me try to highlight it for you. This one, right? So this is the $210 per share level. It is pretty strong resistance. And if you have been follower of our channel watching the Tesla stock, and in fact, a special report that I had done, this $210 per share level, extremely strong resistance, which the market has not been able to break for a few months now. So if that resistance is taken out to the upside, then this ABCD formation to the upside becomes in play. From our analysis perspective, again on the downside, if this D level fails here, we have the 61.8% Fibonacci retracement coming around $145 per share level, and we have this open gap which the price could actually likely fill. But for now, it looks like the price is actually moving and getting stronger. One thing that I've not drawn here is, let me bring it here. This is the blue line, which is 20-day moving average. It's a simple moving average, and what we're looking at is price is just hovering really close to it. In fact, it just closed right at it. And if it's gonna find support from 20-day moving average, then from a momentum perspective, shorter term momentum perspective, the price is strong, and this possibility of tackling $210 per share level as a possible resistance, and in fact taking it out, the likelihood will increase, in my opinion. Let's take a look at Microsoft. So the Microsoft stock is also very, very interesting. Look at this channel formation. This is something which we were watching. In fact, we had drawn this when it was reaching this level, and it did provide some resistance for a few days. Then the price broke above it. We had certain target levels which were met, and then there was a pullback. And in the pullback, it came back and tested this channel right here. The price rejected lower prices, and in fact, after the test, rebounded from here, and we had some further targets which were met to the upside, and now it looks like the price is going to go and target the 78.6% Fibonacci retracement on $320 per share level. This is what we're watching in the Microsoft stock. Okay, guys, so now let's take a look at Meta. Okay, so the Meta stock is very interesting. The reason is that because it broke above the $200 per share level, which is the 38.2% Fibonacci retracement, and that means that the Meta is getting strong. The stock, from a technical perspective, at least in my opinion, is now very interesting, and we'll have to wait and see whether the stock might have some kind of a retracement and might actually go to around $185 per share level. That's going to be the first 38.2% Fibonacci retracement. It might do that, it might not do that. If the stock is much stronger, it might just continue to rise higher right to this 61.8% Fibonacci retracement. Let me show it like this, and that's where it's also going to be able to fill this gap which was left from last year. Now let's take a look at Netflix. So the Netflix stock is really interesting. In the last video which we had done, we were actually looking at a couple of scenarios. One of the scenarios was actually to the downside, so we have this possible black line showing A, B, C, D, a one-to-one projection to the downside. But one of the key things that we mentioned was that we have a support level, or a zone rather, coming between this $316 and $310 per share level, which is actually 50%, 61.8% Fibonacci retracement. And if the price was actually going to break below this $310 per share level, then the likelihood of the price moving lower was getting more. But what the price seems to have done over the last week or so is, in fact, it has formed a double bottom here. It's still respecting this. It's above the 20-day moving average, so from a momentum perspective, it's also gaining some momentum, and that would be a good outcome, because what it could mean is that this range that we see here highlighted here in this blue box, the price might actually be going and testing the upper end of it, and if it's able to break out of it, then what we are looking at is this a possibility for this price to actually go and close this gap around here, which will also be a B, C, D to the upside. So let me try to draw it for you just really quickly as an illustration. There we go. I don't know in terms of Fibonacci retracement what that level might be, but $500 per share level might actually become sort of a possibility. Again, we are watching really closely this stock. Finally, we'll take a look at Roblox. So the Roblox, um, guys, what we think, especially for the new guys, we have been watching this price action. We think that the price might be actually moving in this A, B, C, D level formation to around $60 per share level. We had identified a number of key resistance level coming from the structure right from here. Then there is possibility of structural resistance coming at around $53 per share level. In fact, this is what the price did. It found a fair amount of a decent amount of resistance, moved lower, did this ABCD formation right to this level right here, and form this double bottom here. So far this bottom has been held. As long as this bottom remains in place, we have this one-to-one formation as well, so there's a confluence level. There is a possibility that the stock might actually be resuming its climb higher, and on the second climb higher, the possibility is greater that it's able to take the resistance out, challenge this $53 per share level, and ultimately might even go for the $60 per share level, which is the deep point, roughly about in that region. So guys, this is what we're watching in these key US technology stocks. If you like the way we do our analysis here, how we use pattern recognition, Fibonacci retracements, market symmetry, then please do subscribe to the channel. And if you found this video of educational value, then please do hit that like button. That's an indication to me that people find the videos useful and educational purposes, and it just encourages me to bring more videos out for you guys. So thank you very much. One last thing, that if you want to be able to know when the new videos are released, then please do hit that bell icon button. That way you'll know when the new video has been posted. Every day we try to bring a video on a new segment out for you guys. Thank you very much for watching. Good luck and good trading.